Hello, my friends. Brett Patterson coming at you from the financial capital of the West, the land bountiful. On the 250th birthday of our country. Actually, that's in 3 days, but it's close enough. Joined by Michael Fuller.
Oui, oui.
Mike, how we doing, brother?
Doing good. Living the dream. How are you?
I say that French, but you are American through and through, my friend.
I am.
Spencer and Brian, the chairman and the tall fella. Good to see
Okay.
you both.
Good to see you.
America turns 250. It is the semi-quincentennial
Ooh,
of
Well
this great
done.
country.
You said
very
that
well
well,
done.
Brett. You said that very
I've
well.
been practicing, Spencer. I've been practicing saying that. We live in the greatest country in all of the world. American flag behind Brian right now. God bless America. What are we thankful for this great country on its 250th anniversary? Go, Mike.
The Supreme Court.
Great. I love it. Checks and balances. The Constitution. Amen, brother. Spencer.
Oh, I think
Wow.
wow, so much to be thankful for. Let's just say freedom and Lady Liberty. Let's just say that.
Ooh, I like Lady Liberty, baby. That's a good one. Brian.
Yeah, those are both good ones. I'm enjoying the World Cup right now.
Hey,
It's
I'm
kind of
grateful for
fun.
that.
World
Grateful for
Cup.
that. Let's go to the World Cup. But first, I'm grateful for all those things. And I'm grateful that we are able to, in a country, build a business called Iron Gate Global Advisors and service so many people to help them grow their wealth, plan for the future. In no other country can we do what we're doing, boys. And it is amazing. Okay, World Cup soccer. Phenomenal game. I was worried. I was really worried when we got the red card that those two countries, I mean, we have to play two countries, which was kind of unfair. Bosnia and Herzegovina. Did I even say that right? I don't even know.
Close.
We had to play two countries, and we won 2-0, boys.
With only 10 dudes the last 30 minutes or so. Right.
Yeah.
And this guy that
Yeah.
was red carded, he's our leading scorer, and he's not eligible for the next game. He's out. So
You know what the best part of the World Cup is? Is you get a stadium full of great Americans in San Francisco singing the national anthem and then celebrating to some John Denver. Is there anything better?
it was awesome.
Besides hamburgers, hot dogs, and a good barbecue with the family, there's nothing better. All right. Let's move on, shall we?
The row from the Norwegians. Did you see that? That was pretty cool.
Oh, that's pretty sweet, dude. That's pretty sweet. You got that big old Norwegian dude with the long hair wearing cowboy boots with a Texas shirt. I love it.
Hans Magnuson. Yeah.
Yeah. All these videos of these Europeans in America, by the way, and these Australians and all these people coming in, loving our country. It's so fun to
It's
see.
fun to watch.
Yeah.
Yeah.
Super awesome. 250th anniversary. Love it. All right. Let's talk markets. Year to date, we just entered Q2. We're going to talk about Q2, but year to date, as of today, the S&P is up 9%. The NASDAQ, the Qs we call it, is up 16%. Mike and I did
What?
some 16%, the Qs. Yeah, that's pretty good. It's had a little bit of a bounce back the last couple of days. But Mike and I did some research last week, and 80% of the returns on the S&P 500 have come from, call it the memory semiconductors index and industrials. So it's really been an interesting quarter. Oil back down below 68, which is always good. Hopefully we see that in our wallet soon, the cost of inflation. But it's been it's been a fascinating quarter. Always remember this: summers are always crappy as an investor in the market, right? If you're short-term thinking, summers are always crappy. But Q2 was a story of CapEx, we're going to call it. Q2 is the story of CapEx. So what, Mike, what do I mean by CapEx? CapEx, what does that even mean?
Capital expenditures, just CapEx, short way to say capital expenditures, but it's the money, that a business is going to have to spend to like buy, maintain, improve the physical assets, the physical, usually long-term assets of the company.
Okay. So it's capital expenditures.
Right.
Companies use it for several things. Spencer, yes.
Yeah, can I just, like a simple example? I own a company that sells pizzas, and I have my normal business. I buy the pizza sauce, I buy the dough, I buy all those things, and then one day I said, you know what? I'm gonna buy a second pizza oven. I'm gonna buy a big piece of equipment that's gonna let me create, cook twice as many pizzas. That expense of a second pizza oven, it's not the raw materials, it's not the pizza dough, it's not that stuff. It's a second oven. That's the equivalent of a capital expenditure for a business.
So there's the CapEx. There's two types of CapEx. And I love that example. I'm going to go back to that here in a second, Spencer. I'm going to have you go back to that. Two types of CapEx. There's called maintenance CapEx and growth CapEx. Brian, what's maintenance CapEx and what's growth CapEx if you're running Spencer's Pizza Store?
So let's talk about Spencer's Pizza Store. Now, if Spencer bought a new oven to replace the old oven, that's just maintenance CapEx. But if he added a new oven, so now he's got two ovens that are operating, you could argue that new oven, if it's going to bring in new business, more capacity, that would be what we'd call growth CapEx. So maintenance CapEx is just to maintain, for example, in that oven example, just to maintain that oven, to keep it going. You might have to put new parts in every so often. That would be considered maintenance. But going back to growth, new oven to increase capacity, increase revenue, that would be considered growth CapEx.
Okay. Spencer, anything to add? Thank you, B.
No,
On your pizza store?
Yeah, that was perfect. I didn't even think of a pizza store until Mike started talking. He made me think of pizza.
The thing that's interesting about CapEx is, though, on the income statement, those expenditures or that capital is depreciated over the life of for example, the oven. So if an oven had a 10-year useful life, it might take 10 years to expense that oven. So let's say it cost $100,000, so about $10,000 a year in expenses in maintenance CapEx.
Which we've heard a lot about with the hyperscalers, right? And that depreciation. And let's actually even talk about those hyperscalers, because they make such a big portion of our of the market. Okay, and it hasn't been a good year for them. They're called the Mag 7, and that includes NVIDIA, Apple, Google, Microsoft, Amazon, Tesla, and Facebook, Meta. So those are your Mag 7. And a combined Mag 7, they are spending $800 billion combined on CapEx. Okay?
In 2026, now, right?
Yeah. Yes. Now, I say a tale of two quarters. Okay? These Mag 7 names were down 10% on average at one point in the quarter in Q2. They're now down 2.75% for the year. So they have been punished because of that CapEx, the amount of CapEx that they have. Okay, and we're going to talk about whether that's good or bad here in a second. But contrast that to what's done really well in the market. Your SanDisks, your Microns, your Seagates, all these memory names that are up over 200% on average, they're not spending anything. What are they doing? How did they have, like, Micron, Mike, Brian, Spencer, why does the market love those names right now?
So they can raise their price, sell their stuff, big backlog, just raise their prices. right?
Are they spending any more money to produce their memory, their product?
I'm sure some, but I'm not sure about the magnitude of their, CapEx increase. I don't think it's much.
I,
No,
I,
it's
I
not. Go ahead,
think,
Spencer.
I think, Bretter, you mentioned $800 billion of spending by the Mag 7. That has to go somewhere. Who are they paying that money to, right? If you look at a monumental shift of capital, $800 billion is an enormous amount of money that is going to turn on to revenues of other companies' books, right? It's not like they're going in the backyard and they're burning that $800 billion. They're paying other people for goods and services as they expense it, as they do these capital expenditures. So if you're sitting there saying, well, where's that 800 billion going to go? That's why those stocks have gone up, because the market believes a huge chunk of that is going to go, and what chunk, I don't know exactly the percentage, but a chunk of that is going to go to those memory makers. And so what does that mean? It means their earnings are going to grow. So it comes back to the fundamentals of earnings. If one company's spending, if a group of companies are spending 800 billion, someone else is going to receive that 800 billion, and the market is saying, hey, that's money's going to go to them. Those companies are going to be more profitable. They're going to have higher earnings. They deserve a higher stock price.
Yep, that's exactly right. You've seen these companies who are on the receiving end of that not do anything to their business model, very little, if any, capex by those companies, but just increasing prices, and margins expand and revenues and earnings expand. It all expands, right? And that's why we saw Apple come out and raise their prices on their phones, on their computers, on everything, $200 to $400, because the memory is now more expensive because demand is higher. I mean, it is pretty simple fundamentals, Spencer. So that's why they're killing it. But we look at the Mag 7, which we own several of those names. And my question would be, with them spending 800 billion and with them down this year 2% as a group, should we be worried as we look out 2, 3, 4, 5 years that they're just spending way too much money? Like, should we be freaking out right now? And should we be buying these other names?
The thing that's interesting about these the Mag 7 is, as a whole, they were considered capital light businesses for, I mean, really forever. They've always been capital light businesses, and now they are spending money on capital like we've never seen before. And so it has created some uncertainty, and how will these investments pay off over the next 10 years? I think that's what investors are thinking about and worried about. And the optimistic side would say, and I think I lean this way. I believe we have really smart managers running these businesses, and I don't think they'd be making these capital expenditures unless they thought they were going to pay off and they were going to be they would get attractive returns. Returns on, we call it return on capital. I mean, that's exactly what this is. You get a return on the capital they're investing. But it's still, we have to see the proof over the next 3 to 5 to 10 years to see what happens. But I'm optimistic that these investments will pay off and that we have smart managers making good investments. I mean, that's the role of the CEO.
Yep. So are you saying that having trust and knowing the track record of a CEO and those that are in charge is important?
Yeah. I mean, as I listen to the conference calls and I hear Andy Jassy talk about, he is so optimistic about the capex that he's spending, and that they will see great returns. I tend to lean in believing Andy Jassy, because in the past he's proven that he's been a smart allocator of capital, and he's made good investments in the past. I mean, he's the guy that really started AWS for Amazon And look at AWS. I mean, that's been an incredible investment for Amazon, arguably the most valuable investment at Amazon.
It's the golden goose at Amazon for
Yeah.
sure.
Yeah.
Mike, you're shaking your head up and down like you agree
Oh yeah, I agree.
what Brian
Yeah.
said. Yeah.
Reminds me a little bit of Nick Saban, right? In the world of, can I talk about football analogies here? But
Oh, we love talking about football. Yeah.
It is
You know.
American football folks at home that are in the soccer movement.
didn't matter what school he coached at, the school succeeded, right? Different teams, different kind of traditions on the team, types of offense, types of defense. It doesn't matter. When he came in, he led the way to success. So
Yeah. That's a great. He's a great leader for sure.
I think it's
example.
interesting when you look within the Mag 7 and the performance of the stocks. Like I think Meta is a very interesting one. I have a high level of trust in Zuckerberg, but at the same time, the dude spent 10 to 20 billion dollars on the metaverse, and no profitability from it. So you look at the stock performance of Meta compared to Apple right now in this capital expenditure cycle. There's different levels of trust with each different leader, right? I think the market has more concern about that than they do about Andy Jassy and AWS, and the stock prices have reflected that level of trust or concern based on past track records.
So what did we see? So a couple things. Leadership is so important. That Nick Saban example is perfect. You want a CEO like that. Like wherever they go, they succeed. And they might make mistakes, right? Nick Saban might sign a bad class to come in and play. But overall, he's fantastic, as we know. Well, Zuckerberg, throw him in there, right? He's quick to pivot and admit mistakes. In fact, what did he do? What news came out yesterday with Meta as they spend tons of money? What's he doing now?
They're building data centers. They're getting into the data center business, and they're going to sell excess capacity of their chips and compute power. So they're basically following the Elon Musk game plan and sell their excess capacity, which is what AWS did. That's what they did 20 years ago.
So now there's such great demand for this computing power. We saw this with Elon and AWS in your example, but Elon's probably the biggest one with his signing Anthropic to billions of dollars of contract, right? For that excess computing power. So now you have Meta doing the same thing, right? You want leaders running these companies that have the ingenuity, and typically founders are those people, right? That can pivot and make money for their companies to succeed and their shareholders to succeed. It's actually pretty fun to watch.
Go
ahead.
It's important. I think we talk about founders. Founders tend to maybe take greater risks. You look at Zuckerberg and being willing to take risks, but also when they realize that something's not working out, Brett, you said it, they pivot quickly. They make mistakes. They make mistakes quickly, recognize it quickly, and then move on. We don't want leaders that aren't willing to take calculated risks. I mean, we need that. They need to. You look at Amazon's history. They've had tons of failures, but once they realize they have a failure, they move on to the next thing. And of course, but you look at all their successes too, because they've taken risks. Calculated risks, and some of those do pay off, and the good ones more than offset the bad ones.
Yeah. Yep. Think about us. We've done the same thing.
Oh yeah.
Right? And the good decisions far outweigh the bad decisions for sure. But we're hyper focused on the bad decisions to get better and to sharpen the saw. But I would say this about Zuck: the metaverse came before Spencer. He started jiu-jitsu. Once he started jiu-jitsu and manning up, things have changed.
Hopefully he doesn't have CTE.
You go back October of 22, and the market was crazy concerned about all that spending, right?
Yeah. Yeah.
Facebook Meta hits $90 a share, maybe even it got to 85, I can't remember, something like that.
Amazing.
And
Yep.
you really had to place your trust in him, that it was going to happen, and he pivoted. He cut spending. He still spent money on the metaverse, but he cut spending. He kind of refocused the business in some ways, and the stock, what, from 90 to 600 or 700 is what it went to. Now it's going into a different cycle. So trust is gained through track record, right? Nick Saban, no one would trust Nick Saban if he hadn't won championship after championship after championship. But he has a proven track record. And I would say Zuck has a track record, right? For, like you said, of investing, of taking risks, and then sometimes those turn out really good, and sometimes they haven't, and he pivots. But I think that's all businesses. That's the story of every single business.
Yep. Yep. The good ones compound their CapEx spend and get a good return on it. And that's what we believe.
You know what's crazy about the metaverse is investors were really, really upset about, I think it was about $8 billion in CapEx on the metaverse. And compared to what they're doing now, I mean, it's like a drop in the bucket.
Oh yeah, but that's the thing, and that's what it comes down to when you talk about maintenance CapEx versus growth CapEx. There have been a lot of businesses that have spent money on things that didn't increase revenue. You know, I mean, tons of businesses, and those businesses end up going sideways and not doing well. And the same thing is businesses that do invest heavily in CapEx and grow the heck out of the business. And time will tell in these situations. So that's where Mike's example of Saban is a great example. Is you have to have a high level of trust in these people that are making the decisions, and that trust comes from experience and experience and experience that these guys know what they're doing.
Yep. So should we be worried then with this CapEx spend? Summarize this.
I say we watch closely, and we're definitely very aware. But I give him the benefit of the doubt until proven otherwise.
So I'll say this. If you own a name, or I'll ask this question, if you own a name in the Mag 7, if you own Meta, which is set to spend around 125 billion CapEx for 2026, are you selling the stock because you're worried that expense is too great? Anybody?
I mean, we're not. I mean, we trust Zuckerberg, and we think these investments are going to pay off. So we trust until proven otherwise.
There you go. And that's not a recommendation to buy, sell, or trade, or do anything with Facebook. But
I mean, there's such a good business. The core business of Facebook and Instagram, and it's such a good business. It's the leader in advertising, an incredible business, and so there's a lot to like there.
4 billion people a day are touched by Meta. I mean, imagine that, 4 billion people a day, and that's one of the things. I mean, this has kind of gone on to a Meta kick instead of Mag 7. I don't know if that was intentional, but it is. I mean, like the metaverse, the stock flipped on a dime once he said we're going to spend less on the metaverse. He didn't change the underlying business at all. He just said we're going to spend less because the underlying business of Meta is amazing. Absolutely amazing. It's just where you allocate capital, are you going to see a return on that? And that's the biggest question. But 4 billion people, imagine that, every day are using a Meta product.
That's called a competitive edge. Yes, for sure.
And they've used AI and AI models to really improve their core business. Where you look at, and in Amazon, I mean, I think all of the Mag 7 have done that, but probably Meta has probably been the biggest beneficiary of it, just improving their core business, where a lot of the other Mag 7 are using AI to sell to other companies to improve, their businesses. And of course, that's helped their profitability. But Yeah, it's but now Meta's getting into the the compute business and selling excess compute. So
which
it's
is great. We'll
yeah,
see. We'll
yeah.
see. But here's the thing about Q2 that we just ended, right? You had you have SanDisk up 600%. You have Dell 200%, Western Digital 200%, Seagate 200%, Micron 240%. Like that's what they're up so far this year. But you've had a CNN fear and greed index, which we talked about on this podcast several times, which is Mike's favorite indicator.
Thanks for introducing me to that
That
months ago.
that's been an extreme fear. Like you really do have a tell, and you've had a VIX above 20. You've had a tell of really one segment of the market doing extremely well with euphoria, and rightly so. And the bulk of the market in this extreme fear VIX above 20 area.
Breder, and I don't know if you know this, when was the last time that had extreme greed? Do you know the last time the fear indicator? Because I
Yes.
feel like,
It,
I'll be
it,
honest with you, I feel like society as a whole since COVID just is constantly living in fear. I don't know if there's been ever a time of actually that's not true. 2021 could have been greed. That was a nutty time of greed. When was the last time it was
before
extreme
the Mag
greed?
7 sell off, right? And that happened kind of mid to Q2, that the Mag 7 really started to sell off. You had greed right before that. So it was in Q2 that it was a greed.
Oh, you're talking
And
like
then the front end of Q2 it was in greed. And then, a week ago, we're in extreme fear. So it does move,
Yeah.
but it moves relative to the sentiment in the market, which also flips on a dime, right? The VIX goes from 15 to above 20. Gosh. Anyway, we've been in that extreme fear. Tell of two areas in Q2, which has been fascinating to watch. But the important thing here is that you stay disciplined to your process and you don't chase returns. We have never chased returns ever, right? If one of us starts to, the other three beat them up. And we just can't chase returns. We stay true to our process, discipline, our four criteria, and we know that returns will come. And there will be years where we outperform the market. There will be years where we underperform the market. But we know our process works over time. So, anything else to add before we put a bow on that and jump to one other thing?
I would just say about the memory business. Historically, I've really stayed away from those businesses. They're very historically they're very cyclical.
Cyclical.
Boom and bust over and over again. I've watched Micron. Micron's headquartered out of Boise, Idaho, not too far from the beautiful Cache Valley, but it's never been a business that I've really been that interested in. And now, you look at what's happening there, and maybe the fundamentals of that business are changing because the demand for memory is
greater than it's ever been.
It's greater than it's ever been, and maybe that the dynamics there are changing in that industry. We don't know, but it's interesting. Yeah.
Yep. They're at least positioned for a good year or two before more competition comes online, which is hard to create that competition.
I mean, it's considered a commodity product. It has been, and it's very price sensitive, and boom and bust.
Yeah,
we'll see how this plays out over the next few years.
I mean, boom and bust. It was up. DRAM, the ETF that tracks these names, was up as high as 65%. Now it's up 25%. There goes 40 in like 3 days. So, man, buckle up if you own those names. Which, hey, there's nothing wrong with buckling up. All right. Speaking of the 250th anniversary of this great country, on July 4th, What is known as the Trump accounts will be funded. We have not mentioned Trump accounts on this podcast before, but they're awesome. Spencer, tell us what they are, the hows, the amount. Like, what are these Trump accounts and why are they awesome?
So the administration, President Trump, the good-looking tall guy from the state of Utah that he said in the
State of the Union
address, talking about Representative Moore, and other people, Michael Dell, a lot of people are trying to jumpstart saving and investing and compounding growth and trying to help them start on the front end, because everyone understands in that world time is the greatest asset you have when it comes to compounding interest. And so they developed Trump accounts, which are investment accounts for US citizens under the age of 18. Anyone can open a Trump account, US citizen under the age of 18. If you are born between January 1, 2025 and January 1, 2029, the government is actually going to give you $1,000 like as a way to start that account. Now, the government, Dell, micro, I mean, there's been tons of people contributing into this, but ultimately, if you are a child born within those days, between those dates, then you will qualify for $1,000. The way to start your Trump account is, I would just tell everyone go to trumpaccounts.gov. And when you get there, you can download the app, and then you can also you have to fill out a 4547 form through the IRS website, but you can just click on it. We can't do this for clients. We can't open up these accounts, but they can go to trumpaccounts.gov, click on the fill out form 4547. It'll take you to the IRS website, and through the ID.me system, you either create an account or you log into your account and you fill out the information. You fill out your information, the father's information, the mother's information, and then the child's information. And then your account will then be open and ready to receive the $1,000 if you qualify for it. If you don't qualify for it, you still, each Trump account for each kid under the age of 18 can receive up to $5,000 a year. What's really nice about this is, for an IRA or a minor Roth IRA, your kids have to have earned income to be able to get them into these tax advantage types accounts. A Trump account, your kids don't have to have any earned income. And so up to $5,000 can go into a Trump account for a kid each year. And when they turn 18, it converts over to an IRA type product. I haven't seen it exactly, but pretty much converting over to an IRA, which is retirement money that could be used for a certain dollar amount, could be used for a first-time home purchase or health expense or something like that. But for the most part, it's planning for retirement. So you get these kids that are 1, 2, 3, 4 years old, compounding interest. Once again, even just that $1,000, if you're looking over 60 years, growing at 7%, 1,000 goes to 2, 2 goes to 4, 4 goes to 8, 8 goes to 16, 16 goes to 32, and 32 goes to 64. So even $1,000 over a 60-year period could turn into $64,000 growing at 7%. So there's more details about it, in the sense I gave you some of the basics, but employers can contribute to them for employees that are contributing to Trump accounts. It's just a great way. I have always been a big proponent that the way to grow wealth and generate wealth is to own assets. Wages will never keep up with inflation, and so you have to own assets. And I think it's great that this administration is trying to encourage people at a very young age to start to own assets. One other thing I'll put in, there's 5 investment options within Trump accounts, and they're just index funds, low-cost index funds. It's the total stock market, S&P 500, and equivalents. So it's not going to be complicated. go put it in the S&P 500. That's not a recommendation or anything like that. I'm just simplifying and let the money grow.
I love this. I love this. All right. I just did the math. Actually, a calculator did the math. Okay. If you're a grandparent and you're listening to this and you have a grandkid under the age of 18 and you want to do as Spencer said, I want to give him $5,000. Maybe you just had a new grandchild born, right? Or you're a parent with a new child. You can put up to $5,000 in per year. Okay. So over 50 years, if you're making 8% return on the money and you put in $5,000 every year, you invest $250,000 over 50 years. You have, this is just a calculator spitting out these numbers. 8% return, you have $3 million. Like,
what one thing, Brett, once they turn 18, they can't contribute to Trump
shut it
accounts
down
anymore.
Okay. Well,
Yeah,
they should
so-
still invest
but
in whatever that
it'll
IRA product becomes.
Yeah,
They
it'll
should
turn
invest
into an
more.
IRA, and if they have earned income, then they can contribute to it if they earn. But from just even if you do from 0 to 18, you do that. I mean, you're talking about a life-changing amount of money that, candidly, they don't even need to know about until they turn 60, and then all of a sudden it's like, boom, you got millions of dollars.
Mike, you've said this to me dozens of times. The kids in this country need to own assets. This is how they do it.
Yeah, and it's awesome. I think Spencer mentioned that time is the key, right? Getting somebody started just sooner in life, right? Because how much longer are we going to live? Well, it's a logical choice to start sooner in life if you want to get more opportunities to compound, more years to compound. So yeah, it's a nice solution for that.
Yeah, it's amazing. Brian,
one of the big debates in our country today is just the wealth gap. There's people who have wealth and people who don't, and that gap continues to widen and widen. This is one way for the gap to narrow, and that's for young people to participate in America, participate and own a piece of America, a piece of American corporations. And the way you do that, Spencer said it, is you have to own assets. And that's why there is a wealth gap, because there's the people who own assets and there's the people who don't. And this is an opportunity for young people to participate in the growth and the capitalism of America, which is the greatest country in the world, as you said, Brett.
Yep. Love it. And to help these young children learn the power of capitalism instead of communism, socialism, these crazy kids. Anyway, love it all. Love it all. Thank you. 250th anniversary. If you need to learn more about Trump accounts, where do you go, Spencer?
TrumpAccounts.gov is where to go, or call Brett.
Here's the 18-year numbers. All right, you crazy kid, Spencer. Don't call me on this. I won't help you, but I'll tell you where to go. You invest $5,000 a year from the time they're 1 until 18. That's $90,000 of deposits. At an 8% annual return, their balance at 18 years old would be $207,000. An 18-year-old with $207,000.
Plug into that. Now take it to 65. Do another 47 years.
Oh, good night, Johnny.
Yeah.
325,000 in deposits, 9.9 million.
Yeah, it gets dumb. It gets dumb. And here's the thing. This is the hard part.
Country. Yes.
People don't believe that's real. It's real. It's real. Compounding interest is real, and you can't guarantee it's going to average 8% a year. Maybe it averages 5%. Maybe it averages 12%. You don't know. But compounding interest is real, and if you just start with $50, $100, I love Brian's point. How do you close the wealth gap? You educate people and get them to own assets, and you don't have to have $500,000 to go buy a house or an office building, $2.3 million. You can have $20 and go buy a piece of the 500 largest companies in America, and that's how you grow wealth. That's how you narrow the wealth gap. I love that point, Brian.
Amen. Hallelujah. Anything else, boys?
Nope.
I love it.
Happy
Now,
4th of July.
Yeah, happy 4th.
Happy 4th. Yeah.
happy 4th of July. Little John Denver, turn it on in your cars as you're driving. Take me home, country roads. Good luck to the USA soccer team on Monday. Everybody enjoy their 4th of July. Eat a hot dog or a hamburger. No?
I'm smoking
No,
pork butt.
No.
Hey,
Pulled pork. Pulled pork.
Yeah, everyone go to Brian's house. Brian,
We're
go to
doing a big
Brian's
barbecue,
house.
watching
Jump in
the
his swimming
fireworks.
pool. Take
have
me
a
home.
Yeah.
We'll
And
have burgers.
Hunsaker. I
The
love
Nelsons.
this.
Guess what I found out? The Nelsons. We're gonna be watching Sandlot outdoor. We're gonna set up an outdoor
Great
movie,
American
and we're
movie.
gonna watch Sandlot and have burgers. There will be hot dogs, but I encourage people not to eat those. I'm a snob when it comes to those. No
You
hot
are.
dogs.
You are. Nothing beats a good Costco hot dog. Are you kidding me?
Oh, come on, man. No.
Americano.
I can name 4 billion things.
Hey, turn on Sandlot, Miracle, Rocky 4, whatever American movie you want to just get fired up to and enjoy the 4th of July. Right, Mike?
Absolutely.
Amen. Until next time, my friends, have a great holiday. Bye now.